One nation, one tax, one market. Good evening, ladies and gentlemen. Law Essentials welcomes you to the interactive session on basics of GST by CA Venugopal Gella. CA Venugopal sir has been practicing as a CA and a GST consultant. He is a partner at Venu and Vinay since 2002. He is also a member at the Institute of Chartered Accountants of India. He did his business analytics and intelligence from the Indian Institute of Management, Bangalore. He is specialized in application development, internal controls, and management consultancy. Thank you for being a part of this interactive session today, sir.
Thank you.
I would request you to go over to your presentation, sir.
Yeah. Hope the screen is visible to everyone.
Yes, sir, it's visible.
Is the screen visible, Farhan?
Yes, sir.
Yeah, all right. Great. It's good to meet all the law professionals on this interactive platform. And thanks to the Law Essential team for inviting me to discuss some of the basics of introduction of GST laws in India. Right. What I would be doing is I would quickly go over certain concepts from the GST and constitutional provisions. Main aspect or ingredient of GST are two, which is supply and ITC. There are some miscellaneous aspects I would be touching upon, and I'm sure all of you are the law graduates. Definitely, when it comes to the constitutional provisions, you would definitely have much deeper knowledge than me. However, I would share some of the basic things what is relevant from the tax laws perspective. Now, as Farhan mentioned, that GST has been started with the slogan "One Nation, One Tax." Now, as we go along, what does the title "One Nation, One Tax"? Is it really one nation, one tax, or is it a multiple taxes? We would get along and understand that. Now, GST is a comprehensive tax which is levied on manufacture, sale, supply of goods or services, both put together. And we also call GST as a destination based consumption tax. It's called as a destination based consumption tax. So, whichever the state which is consuming the goods or services would get the revenue. And the taxable event, the triggering point for the levy of GST is supply. So whenever there is a supply, we have a GST coming in. We also call GST as a compliance based law because the GST is everything system driven, from the registration to cancellation, everything. You do not interact with the officer. In fact, the assessments are self assessment, right? So that's the GST as a broader sense. Couple of points one needs to definitely understand about when we say GST. As I said, it is a destination based tax. If a supplier is in Delhi and he is making a supply of goods or services to Rajasthan, Rajasthan government gets the revenue of that. The tax whichever is levied would go to the benefit, go to state of Rajasthan. But the supplier is in Delhi, he would be monitored and assessed by the officer who is in Delhi. So monitoring state is the supplier state. The in terms of the funds would be received by the recipient state, which is Rajasthan. So a couple of important points one needs to know under GST. It is POS. POS means place of supply. So the type of tax that would get levied in GST, though it is one nation, one tax, it is not just GST, it is IGST, Integrated Goods and Services Tax, CGST, Central Goods and Services Tax, SGST, State Goods and Services Tax. In union territories, instead of SGST, it would be called as UTGST. The fundamental principle in understanding the levy of the GST, if someone says the GST is 18%, it means IGST is 18%. So CGST would be 9%, SGST would be 9%. So the rate of tax between CGST and SGST is exactly 50-50. And the question you might ask, why do we need to have two different levies and IGST? It's just ease of administering and paying the taxes. In the state of Delhi, I can easily pay taxes of Delhi. In the state of Rajasthan, I can pay the taxes of Rajasthan. In the my state Karnataka, I can pay the taxes of Karnataka. But if I'm doing a transaction between from Karnataka to Bombay, Maharashtra, I cannot pay the taxes of Maharashtra. I cannot register there and pay the taxes of Maharashtra. So whenever there is a transaction which is interstate, one state to another state, we call it as IGST. Whenever the transaction is within the state, it would be CGST and SGST. So what is the determination factor to define that it is either an IGST or SGST? So the supply should have been between two states. How do you determine that the supply is between two states? First, the location of the supplier. Whomsoever is supplying is the same state of the place of supply. Wherever the place of supply, then it would be CGST and SGST. If the location of supplier is not equal to place of supply, then it would be IGST. So the determination factor for levying the type of tax is the place of supply. Now, generally as a thumb rule, place of supply is location of recipient. So I'm here in Karnataka, I am making a sale. Someone from Delhi is coming all the way to here in Bangalore, purchasing some goods and taking them back to Delhi. You might think the sale is getting concluded here in Karnataka, the place of supply is Karnataka. The answer is no. Since the goods are eventually moving to Delhi, the recipient is in Delhi, the place of supply would be Delhi, the transaction would be regarded as interstate supply and IGST would be levied. This is one of the fundamental principle in GST. Interstate supply is IGST, intrastate supply is C plus S, CGST, SGST. Now, another point one needs to know is levy is on goods and or services or both. So there shall be a supply of goods, supply of service, supply of goods and or services put together. That is the supply. But when it is levied, the levy would be either treated as goods or services. Even though when you are supplying put together, you have to finalize as one. In our financial terms, we call it as profit and loss account. But eventually, it would be either a profit or loss. We never call it as profit or loss account, we call it as profit and loss, but it is always either profit or loss. Likewise, when you are selling goods and services, which are bundled together, you have to eventually classify it as either a good or service. So if there are multiple transactions in a single transaction, you still need to classify either it is a goods or services. Schedule 2 of the Act gave certain transactions a deeming nature, saying that, okay, even though it is goods, I am saying it as service, so you treat it as service. Let's look at your own profession. If you give an opinion to a client, right, client comes to you with a query, you draft an opinion and you are handing over say 10 pieces of paper and you are charging 1 lakh rupees for that opinion. Now, what is the supply? Is the supply a good or service? Now, what you are giving to him is this 10 pages which is printed, written, and signed. For those 10 pages which you are giving, he is giving you some fees. Technically, you are giving him some goods and he is giving you some money. Isn't it regarded as supply of goods? Maybe, like, right, you are actually giving your opinion in that paper. So in these matters, so government has actually come up with the activities to be regarded as the supply of goods or supply of services. Further example, like in a restaurant, you go and eat food. You go pick one idli masala dosa, right? So you go there to actually eat the food. Food, an article which is a movable, is ideally a good from the definition, but still it is regarded as a service. So certain items are bundled. You go buy some air conditioner. Now you instruct him, please deliver it to my house. Now he is also selling that air conditioner. He is also giving you transportation. You may say that okay, installation is all yours. He does the installation also. Even though there is a goods movement and services movement, from when it comes to the levy, it would all be taxed at the rate of the air conditioner. So these are the some other fundamental principles one need to know, that eventually if there is a goods and services bundled together, it has to be either goods or service. Now, certain constitutional understanding, why is the need or necessity of GST coming in? And most of us all know that 101st constitutional amendment has brought the changes to 7th schedule and GST has originated. In fact, the GST law has been much thought about law. The efforts which the draftsmen have put in drafting the law is really great, because the if you see the after GST coming in, three finance bills have come and the amendments to the act are very minuscule. So the law has been very thoughtfully drafted and presented. Now, what are the need originating of the GST? Prior to the introduction of the GST, there were multiple levies happening. There was VAT and service tax, which broadly we know excise. But let's take a simple example of you go to a hotel. When you go to a hotel, there is food and beverages which are served. There is a VAT which is levied on it. Since that is also treated as service, there is some portion of service tax levied on it. You stayed, assuming it has lodging and boarding, you stayed in the hotel charges luxury tax. You had spa and other things, you use them, there was an entertainment tax. Now there are multiple taxes. When a bill is produced to you, you might really wonder that is this all or is this correct, and how do you compute the tax, because it is not straight one number which is one entry, and state to state it differs. The VAT in Karnataka was 14.5%, VAT in another states was 15%. Some article in Karnataka classified at the rate of 5%, the same article in another state is classified as say 15%. Right? There was no synchronous. Right? That is where they brought in this concept called one nation, one tax, which means across India, wherever you go, you would only find GST and the rate of tax would be same in case it is an indirect taxes. Indirect taxes means the tax is levied indirectly. So the burden of payment of tax is never much felt. Including, if you notice, the much called about income tax, we always look at, okay, how can you save income tax? But look at a person who is earning an income of say 30,000-40,000 rupees a month. If you ask how much income tax he would be paying end of the year, hardly anything, nil. But 40,000, what does he do? He pays house rent, he buys some gadgets, home needs and everything. But indirectly, unknowingly, he is contributing. If out of 40,000 he spends 20,000 for his home needs, on an average at 12% tax every month, he is contributing around 2,500 rupees to the nation, right? So the burden of the tax is generally hardly anything felt, right? So it has been brought in to unify the system of taxation. And section 173 and 174 of the respective CGST and state SGST acts gives what are the acts have been repealed, and the law also has provided a time limit of 5 years to complete whatever the pending cases that were in. Now, the applicability of the act, it applies to whole of India, including Jammu and Kashmir. In most of the acts which you read earlier, it was always to start applies to whole of India except Jammu and Kashmir, right? So, but here is a law which act which came in, it applies to Jammu and Kashmir too. And After the Article 370, the most of the laws now applicable to all the states and everything is at par. Now, Part 6 of our constitution provides that every state there shall be legislature and UT administered by president. So we have some UTs with legislation, some UTs without legislature. It is applicable to all the states. So either SGST or UTGST. What are the relevant articles under constitution which got amended by way of amendment GST Amendment Act? Firstly, we all know Article 245 gives the relationship between the union and the states, wherein it says both have powers to make the laws, but however, the parliament can make the law to whole of the territory, and the state laws are restricted to within the state. So SGST is limited to the state per se. And the need of this is Section 11 and 13 of 12, 13 of the IGST Act also gives the power to tax international transaction where the supply is happening in the course of movement between one country to another country. So when I'm exporting, the goods are moving out, the power is drawn to levy the taxes there also. And we all clearly know that the taxes cannot be imposed unless otherwise there is an authority of the law. At this point, I would like to bring two aspects, which one is the revenue cannot be permitted to levy duty twice on the same item without a warrant of a relevant provision. So I cannot levy on one item sales tax and the same item service tax. Same item sales tax and service tax could not be levied. Service tax was a matter of the center, sales tax was a matter of the state, right? And unless otherwise there are relevant provisions, you cannot levy both. But however, there is an aspect theory, and this is much talked about theory. There were case laws, many case laws on the aspect theory saying that if the same transaction involves multiple aspects, and the fact is there is an overlapping point to levy the tax but doesn't take away right to levy the tax. If I have to say, in the case of works contract, a GST is levied. I construct buildings, GST is levied. Post construction, stamp duty is levied. The purpose of stamp duty is different. The aspect of stamp duty is transfer of the immovable property. But the same property suffered a GST because during the course of construction, I am supplying steel, cement, construction activity to the recipient. The aspects are different. But what is taxed is the same apartment, same building. So there can also be a dual levy that would come in. So we all know the power to levy is split between parliament and the state legislature. And this comes by various lists. List 1 is union list, list 2 is state list 3 is concurrent list. 246 was the power or any challenge which was done in the courts. This article was challenged for various levies. With the introduction of GST, there was actually no place to introduce GST with the Article 246 the way it is in. So what they have done is they have inserted Article 246A. And also another relevant article is if there are any inconsistency in the laws made by parliament and the laws made by state, we all know if the laws made by state are not correct, the laws made by parliament would prevail. So just for an information, I'll come back when it is needed. So certain entries got repealed after the introduction of the GST. Entry 84, which is of union list, all petroleum products are outside the GST. They have deferred, but still they can be brought to GST. They said the power to levy a VAT excise is still there with the states. They said they will retain that. They have removed octroi. They have removed tax on services. They have removed tax on advertisement. List 2 was the state list. Octroi entry tax was the power of the state that has been removed. Some entertainment taxes has been removed. And one thing which when they have said removal of entertainment tax, the power to levy by the state is removed. But even municipalities, panchayats have a power to levy. They'll continue to levy that. For example, while the events which are happening during the festive seasons, like there are shops which has put up for firecrackers and everything. So the local municipalities, panchayats and municipalities levy certain taxes. Those taxes can continue. What is power which is taken off is center to levy indirect taxes, state to levy indirect taxes. Both the powers have gone off. And since 246 cannot be used as such, they brought in 246A. And it starts with a non-abstent clause, notwithstanding anything contained in 246 and 254. Both we have seen. And they said Parliament and the every state have powers to make laws with respect to goods and services. So the power to levy tax is given both for the Parliament and the states. Next, with respect to interstate transaction, only Parliament can talk what should be the levy or the procedure. And they have also given a reference to Article 279A for deferring to a future date. The effective date of certain items have been power given to GST Council. That is petroleum, all these 5 petroleum products, they have deferred it. Which brings to an important thing, what is goods and services? Firstly, the GST, they use the word goods and services tax. So since they have used the word goods and services tax, so that got defined under 36612A, which means it is a tax on supply of goods and or services or both. It will be goods and services, or goods or services, or both, except alcoholic liquor, which means alcoholic liquor can never come under the purview of GST unless again constitution amended. But these petroleum products are already in GST but deferred to a future date. When it comes to the goods, the definition of goods is goods includes all materials, commodities, and articles. Pretty simple definition and known to many of us. But services was not there, so they brought in 36612A and it said anything other than goods. Now, again, all of the law professionals have food for thought. The moment they have used as anything other than goods, it is an exclusive definition. So other than goods, everything comes under services. Can I say a transfer of an immovable property? Is it a service? Right? So these are when the definitions are coming under a wide enough, one needs to really think. So what is the ambit of goods and services? Technically looking at this, anything which is sold will be under GST. Either it has to be a good. If it is not good, it becomes a service. Next, the 269A brought in to say the levy and collection of GST in interstate. And I said interstate transactions would be supervised by the Parliament. So with the powers of taking the decision, since the state and center is involved, they have introduced another new quasi-jurisdictional body kind, GST Council. So GST Council is the one who would be making laws for the GST, would be recommending the laws for the GST. Of course, the states and Parliament would have to adopt for the amendment of the act, but with the procedural changes would be taken by Council. Now, whatever the taxes which are collected, it is GST, IGST, CGST, SGST. So there is a portion for the state and the portion for the center. So they have also put it in the charter. Whatever is the portion for the state cannot be forming part of consolidated fund of India. So whatever in the budget which is presented year over year, only the center portion of the taxes should be treated as the revenue for the central government or the Parliament. Rest of the things, states would be recognizing that revenue. In case if the states have a shortfall in the revenue, they have introduced a compensation cess to make good for the compensation. So GST Council has got power from Article 279A, where they have constituted that this would be another body which will take all the decisions with regards to the GST. And it is headed by Union Finance Minister as a chairperson. Again, Minister of State is also there. and all the state ministers are there. So basically, the powers is shared between state and the center. So one third is with the center, two third is with the states, and so there is a difference. Any decisions have to be passed. At least 75% of them have to approve it. So after receiving the presidential assent, all these laws have become effective from 1st July 2017. These laws have become effective and it has come into the power. Now, one other important thing which we also need to know is the to the parliament, the GST council has to give the statement of the account. And I said there is a something called Goods and Services Compensation to States Act. Since the states also agreed and moved to the GST, whatever the revenue they were getting by way of VAT, they have lost. So, since they have lost some revenue, with the introduction of GST, they really do not know whether the collection of them will be same or not. So, what the MOU they have signed is they have given 14% CAGR. So, every year there would be a 14% increase in the revenue to the states. Had the VAT been there, they considered this much would, if 100 rupees was a VAT collection, owing to the GST, if the next year the allocation between state and center, if it was, say, the state got 110, center will compensate it by another 4 rupees. That is where this compensation cess act is levied. Now, I said under GST there were two important things. One is supply, another thing is input tax credit. So let's understand what is this. Entire GST revolves on this one word called supply. If there is a supply, there is a levy. Now, what is a supply? Supply itself is treated as an inclusive definition. Supply includes all forms of supply. Like supply includes all forms of supply. So supply is to be understood as something being sold, something being serviced, something is being given. So it includes all forms of supply. It could be goods or service. And then we saw the definition of goods and services. Even in the GST Act, it is kind of same, both goods and services. So services means anything other than goods. Goods means something which is movable. Tangible is only goods. Intangibles is not goods. So all forms of supply of goods or services or both. And please note it is an inclusive definition. And it could be such as, so they gave again and different types of adjectives. Of course, all these are verbs to connote or denote what could supply be. So all forms of supply such as sale, transfer, barter, exchange, lease, rental, lease, disposal, and it could be many things, other things also is also supply. And supply would also include made or agreed to be made. Even if I agree to make a supply to you, even that is supply. If I agree to give you an opinion and you have given me an advance towards it, even though I did not provide you an opinion, I have received an advance, I am leviable to tax. I am liable to pay taxes on that. Please note it has to be for a consideration. So supply has to be for a consideration. They did not denote it as a cash. So it has to be for a consideration. We could also get into a barter saying that, okay, you will give me a legal opinion, I will do an accounting service or tax return filing services. There is nothing paid in cash, even though there is a consideration which is not flowing in cash, it would be treated as a supply. And it has to be made by a person in the course of furtherance of business. This is such a simple one definition. Whole of the GST Act revolves on it, because for a levy to happen, it has to be supply. Now, you may be thinking that then there could be many things which will go out of the scope. Unfortunately, no. Anything you can think of, firstly, it would be either good. If it is not good, it is a service, right? And there's nothing called charity. Everyone does with a motto to earn profits. In fact, everything is business. 2 subsection 17 of the Act has defined business such a widely, even the associations which are made. And there was a classic Calcutta the association case where the question was levied whether the activity which is done by club to its own members, is it a service? uh, the courts have held it is not a service, but when it came to GST, they have included that in the definition of the business, saying that yes, it is a business. Including charitable institutions are treated as a business. The business they are in to doing charity, but still they are doing business. So everything one can think of in a commerce, trade, commerce, business profession is under the levy of GST. If I have to put it in a simple words, most of the finance professionals are aware of is P&L account, financial statements, whatever you can draw or identify in the credit side of the P&L, which is sale of goods, services, direct income, indirect income, anything, sale of capital asset. It is not my business asset. Once in 5 years, I am selling plant and machinery, I am replacing car. All this comes under the ambit of supply. Very interesting thing is, even though it is one nation one tax, since there is a CGST SGST state specific levy, even though you have branches in each of the states, it would be treated as a different entity and we call them as distinct person. So the stock which is moving from one branch to another branch is also treated as a supply. Taxes needs to be paid. Even though it is your own branch, you're not making sale to end customer, you're manufacturing and putting your stock in different branches across India to further sell to the customer. So the moment it is moving from this state to another state, it becomes a supply. So the supply is wide enough. So there are multiple types of levies: forward charge and reverse charge. So what is a forward charge? If I have to put a simple example, consider there is a supplier who is selling goods. Now, there's a buyer, when he buys these goods, say the amount which has come in the bill is 118 rupees, he pays 118 rupees to the supplier. That's what we normally do. What does the supplier do? He retains 100 rupees, that is his income, and he pays 18 rupees GST to the government. We call this as forward charge. In case of a reverse charge, when a supplier is selling these goods to the buyer, now buyer, instead of paying 118, he pays 100 rupees to the seller and he pays 18 rupees directly to the government. So in case of a forward charge, I pay to the seller, seller pays to the government. In case of a reverse charge, I directly pay to the government. Eventually, the taxes are always borne by the customer. But in reverse charge, the buyer has an obligation to pay the taxes to the government directly. So what are the reverse charge? The classic thing is all the advocate services. So whenever an advocate is providing any service, the recipient will pay taxes on that to the government directly. Instead of paying it to the advocate and advocate paying to the government, I pay the fees to the advocate, balance I would pay the taxes to the government. Likewise, there is a goods transport agency services, sponsorship services, security services. There are a list of services which are there. Even for goods, certain goods, they said where these goods are purchased, you pay only the principal amount to the seller and the taxes needs to be paid to the government directly. So how do I understand what is reverse charge, what is forward charge? So whatever which is under levy a forward charge, for goods it is notified under notification 1 bar 2017. CTR means central tax rate notification. For services it is central tax rate notification 11 bar 2017. In case of a reverse charge transaction, for the goods it is notified in 4 bar 2017 and services it is notified in 13 bar 2017. Time to time these notifications gets updated, but whenever a notification is updated, they amend the original notification itself. So the mother notification would be this. Certain items, even though they are under levy or under the purview of the GST, they have been exempted. Like essential, the food, basic needs a common man have, all the pulses, food, rice, wheat, dal, or drinking water, unless it is packaged or even the rice, if it is a branded, it is taxed at 5%, but unbranded, it is exempt. So the certain goods and services are exempted from levy. So the things which are exempted from levy is notified in 2 bar 2017 and 12 bar 2017. So the next other thing in GST one needs to know is input tax credit. In fact, the biggest advantage or the game changer of GST is input tax credit. If I have to say why, earlier in the VAT regime, what I used to get is the credit of VAT. So, assuming if I am a business person, I sell certain material, I purchase, let's say, at 100 rupees, and I have, for ease of it, let's take 10% tax rate. I have paid 10 rupees as a tax. So, my cash outflow was 110. When I am selling it to the next customer, let's say I want to keep a profit margin of 10 rupees. I would be selling not 110 plus 10, I would be selling 100 plus 10. The 10 rupees which I have paid as VAT was available to me as input tax credit. So there was no tax on tax which was creating cascading effect. That was fine. But the problem that came in, the good which came to me suffered excise duty. Senvat was paid on excise duty. I I have purchased computers, equipments, there were excess duty towards it. I am hiring security charges. I am hiring the auditors, accountants. I pay service tax to it. I have some other services which have availed. There was a luxury tax, entertainment tax was paid. These other taxes were never senvatable, never vatable. I was never getting an input tax credit. But now in GST, both the outward tax is GST, inward tax is GST. So the seamless input tax credit was available. So the biggest benefit of the GST is input tax credit. However, it's not that input tax credit gets to everyone. For you to get an input tax credit, you got to be a registered person. Only a registered persons get an input tax credit. So an end customer, for them, it becomes a cost. For a registered person, it is an input tax credit, which means if I am paying taxes to my supplier, it is as good I am paying it to the government. So in an example, if I have to take a simple example, 100 rupees I am purchasing and I am paying 110 to my supplier. 100 the product price and 10 rupees GST, 110 I have paid him. Let's take I am selling it at 120 rupees. 20 rupees I kept margin, 100 plus 20, 120 rupees. And on 120, if I have to levy 10% tax, 120 into 10%, 12 rupees. To the end customer, from the end customer, 120 plus 12, 132 rupees is what I'm collecting. But when I'm paying it to the government, even though I have collected 12 rupees from the customer, what I would be paying to the government is 2 rupees, because 12 rupees I have an obligation to pay. Of 12 rupees, 10 rupees I have already paid to the supplier. Only 2 rupees is what needs to be paid. The 2 rupees now I will be paying to the government. So 12 rupees is my liability. 10 rupees would be regarded as input tax credit. So the input tax credit is adjustable. So it would reduce my cost. Even though there is a cash outflow, but it is not my cost at the time when I'm making a purchase of the goods. Please note, other way of calculation, my profit I said 20 rupees, 20 rupees into 10%. So the tax from the cash outflow perspective, whatever the margin I make, that is what the cash I would always pay to the government. However, if I have to take an input tax credit, there are certain conditions. I should have procured the goods. I should have had an invoice. I should have received the goods or services, and I should have paid the taxes to the supplier. Such supplier should have paid to the taxes to the government. Now you may ask me, how does the recipient buyer know that the supplier has paid it or not? So I said in the beginning, in the first slide, GST is a compliance based law. So everyone needs to file the returns. So as and when you file the return, it is visible in my account that so and so person has made a supply to me and so much tax has been paid. Government said If it is visible there, you take a credit, otherwise do not take a credit. There could be a timing difference, so they might be filing a quarterly, you are filing on a monthly basis. In such a scenario, they said 10% of the amount which is visible you can take on a provisional basis, but you got to rectify within certain time limit. This is all about ITC. Apart from this, yeah, another thing about ITC one needs to know is you can take input tax credit only if you have output tax liability. If you do not have a liability, you cannot take input tax credit. I am procuring certain goods, I am using for making an exempt supply. Let's take a simple example. I am a rice dealer. I buy rice, I did not pay tax. I am selling rice, I need not pay tax. But the premises in which I am living, I am paying rent to the landlord. There's an input tax credit. Can I take it? No. Your own profession, advocate. When you are making providing service, it is under reverse charge. The obligation is on the recipient to pay the taxes. You, as a supplier, you have no obligation to pay tax. Given that you do not have an obligation to pay tax, what happens to the ITC which on your procurements? You would have procured a laptop, the GST paid on it. You are there in an office, whatever is the GST paid to the landlord, all those becomes cost. So ITC is not available if you are providing non-taxable, exempted or nil rated supplies. It is available only if you are providing a taxable or zero rated supply. Zero rated supply means exports where the tax rate has been made to zero. It's not zero. Zero means actually it is nil. But since you are exporting, government do not want to put a levy, so the rate of tax is made to zero. That is why it is called as a zero rated supply. Apart from that, even though if the goods are used for business, even though I am in the profession of chartered accountant, I'm providing the chartered accountancy, audit, assurance, taxation services which are taxable. But if I purchase a car for my office, no input tax credit, even though used for office. Food and beverages, staff welfare, no input tax credit. If I have paid any penalties and owing to penalties, if the government has levied a tax under section 74, 129, 130, no input tax credit. If my goods got lost or stolen, no input tax credit because you have no output supply towards that, so no input tax credit. If I am constructing any factory, building or anything, works contracted, no input tax credit. Insurances, no input tax credit. If the goods are used for personal consumption, again, no input tax credit. So government said for these procurements, even though it is for business, input tax credit is barred. You cannot take it. But for one has to take the input tax credit, I said it has to be a registered person. So registration is mandatory. And who has to register? If the supply value of the supply in any financial year is more than 20 lakhs. If it is goods plus services, 20 lakhs. If it is only goods, 40 lakhs. Of course, northeastern states, some notified states, it is only 10 lakhs. So what is the turnover criteria? Everything like taxable, exempt. If my value of supply is exceeding the threshold limit, then I have to register. Other than that, even though my turnover is less, they have given certain category of people under section 24. Even though turnover is less, you have to register. Now, all that I have covered in the GST is the basics of supply and ITC. There's a lot to cover. So there are returns that needs to be filed on a monthly basis. Everyone have to file the statement of outward supply and what is the monthly return. So outward supply, they call it as GSTR1. The cash that needs to be paid in GSTR3B, on an yearly basis GSTR9. There are many returns, but broadly you have to get that. I also have to submit returns. Whole of the law is bundled into the returns and submitted. So compliance based law, everything revolves in the returns. So returns got to be very accurate. There are other provisions of the law which deals about maintaining of accounts and records, refund related assessments, inspection, search, seizure, demand, penalties, appeals and revisions, offenses and penalties. So there are other aspects of the finer aspects of the law which needs to be dwelled upon. Of course, this being a basic session, I intend to give you a glimpse of reason of why GST law came in, and what are the two main ingredients of the GST, which is supply and input tax credit. Hope that was very clear to you. And what we will do is we will spend look at any questions that have come, and we will try to address those questions. And feel free to write to me if you have any specific question about the topic. You can reach out to me on this email ID. So over to you, Farhan, if there are any questions we have to look at.
Thank you so much, sir. That session was very insightful, and I think you have given a very detailed description of how GST, and it would be very insightful for any law student to have watched this session. I would request anyone in the audience to put forth a question in the chat box. This is your time. The first question we have coming in from Rajesh Khetawat. Suppose I'm in composition scheme in GST. If I purchase goods from unregistered person, then GST will be paid to the government by me or not?
Right. So one other thing about GST, there is something called composition scheme, where basically if there are a small traders and who do not want to get into this hardship of maintaining books of accounts, pay segregating the procurements into 5%, 12%, 18%, all those things, government said, let us introduce something called turnover tax. So whatever is your turnover, just pay 1% on the turnover as your tax. And the two taxable portion of turnover, you just pay 1% tax on it. So a small, basically traders and small restaurants, they come under this. For restaurants, there is a 5%. So the question which we have from Rajesh is, if someone is in this composition scheme and such person is buying from an unregistered person, should he pay taxes to the government? Answer is no. So who has to pay the taxes to the government is only those reverse charge which I have mentioned in 4 bar 2017 and 13 bar 2017. Otherwise, composition dealer would be paying only that turnover tax.
The next question coming in from Kirti Panthagani. Sir, what are the components of supply?
Yes. Okay. So Kirti, the components of the supply, as I mentioned, is firstly it is all forms of supply. Now, supply means supply, or supply includes supply. So the word definition supply, they did not want to, government did not want to get caught with themselves. So they said supply includes all forms of supply. They have used sale, transfer, barter, exchange, license, lease, disposal. So for a supply to happen or something to be called as supply, there is a transaction between two persons, and it could be goods or services. So what is goods or services? If it is movable, it is goods. Anything other than that, definitely it is service, and it should be a consideration. If there is no consideration, no supply. Please note, if there is no consideration, there is no supply, and it has to be in the course of furtherance of business. Business is very wide enough to cover everything to it.
The next question we have from Kittu Singh. So, if I purchase goods from an unregistered person, will I have to pay goods to the government or not?
Okay, so will I have to pay GST to the government or not? No, you need not have to pay GST to the government, because just because you have purchased from an unregistered person doesn't make you leviable to tax. Please note only those list of services and goods which I have given. Like you have purchased from an advocate who is not registered, you procured some advocate services, you have to pay GST to it. But you you were driving, your tire was flat, you went to a shop, got your tire repaired, you paid some money to him. He is not registered, he is not charging GST. That doesn't make you to pay GST. So it becomes there is no levy on you to pay tax for that unregistered purchases.
The next question we have from Tarun Kumar. In case of buildings which charge GST but the project is not ready, what is the remedy in such circumstances?
Uh, Certain things in law, whether you like it or not, if that's the law, that's the law. Whether you like it or not, if you have to travel on the left side of the road, you have to travel on the left side of the road. So when you're buying a building and the builder is charging GST, he can charge the GST only when the project is not ready. Like he cannot charge the GST after the project is ready, because it changes the character. It will become an immovable property outside the purview of the GST. There is no GST if it is an immovable property. Schedule 3 of the Act keeps it outside the levy. Now, during the course of construction, he has to levy the GST, and if you're buying a property from him, you have to pay GST to it.
We have questions coming in from the audience whether we can share the PPT presented, sir.
Yeah, sure. It would be shared. I will be sharing it to the host. It would you can reach it however it is.
The PPTs will be sent to you via mail after the end of the session. The next question coming in from Akhila. Sir, can you explain about the value of supply?
Yeah. Section 15 of the GST Act talks about the value of supply. Now, from the plain reading, if I have to say, value of supply means whatever the money you are collecting for the transaction. If the value is in cash, it is cash. If it is cash plus kind, then we go to the valuation rules. Whatever is there in the rules, open market value, that becomes the value of supply.
I think as the session is filled with advocates and law students, this is a very relevant question. Does every advocate have to register for GST?
Yeah. Again, from the GST perspective, whatever you do is a supply. So, as an advocate, to the limited practice of advocacy, you need not register for GST, because advocate services are under reverse charge. So, recipient has to pay GST. Given that he is paying GST as an advocate, you do not have any liability to pay GST, no need to register. But apart from the advocate services, if you are doing services other than that, which means you are doing tax, there are some advocates who practice in tax matters. You are helping in filing the income tax returns or GST returns, or you have properties which you have given a commercial property on rent. They are not advocate services. So only for the advocate services, if you only have advocate services, no need to register. If you have services other than advocate services and including advocate services that's crossing 20 lakhs, then you have to register. Mere having registered, you would not be paying GST even on advocate services. Leaving advocate services, all other supplies, you would be paying taxes at the applicable rates.
The next question from Kittu Singh again. Sir, as you earlier talked about the client who is paying money to the advocate automatically, the GST is transferred to government. How does this process usually work?
So how does this process work? Okay, that I have to walk you through a complicated procedure of GSTR 1 and 3B, but a pretty simple way if you have to understand. While I am filing my sales return every month, saying that these are my sales made and so much is the taxes collected and I'm paying, I will add one more line to it and say that so much is a reverse charge cost which I have incurred and I will pay the taxes. GST is a self-assessment tax. The moment you cross a turnover of 2 crores, an advocate, a chartered accountant or a cost accountant has to verify your records and issue a certificate. At that time, if some taxes are missed out, we would be paying taxes there.
The next question from Varsha Kumare. What is the procedure of paying GST to the central government by the state government, and how the state government gets its share back from the central government?
Yeah. So this is something which is same like a buyer and a seller transaction. So the common thread for whole of the GST, or the backbone of GST, is GSTN, Goods and Services Tax Network. One of the primary role of the GSTN is to split and allocate the revenues to the state and the center. So GSTN every month says how much is the revenue that this your state has got in this month, and basis that states would make the claim. CGST SGST portion is already with the states, because the government accounting is a cash basis accounting. Whenever I am filing the returns, I pay a challan. So the SGST portion is already with them. The CGST portion, or the differential portion, the center will be making good time to time out of their cash flows. They make the payment to the states.
I think with this, we come to the end of the session, sir. Thank you so much for joining with us today. It has been a pleasure hosting this event.
Yeah, thank you, Farhan, and thank you, Law Essentials team, for inviting me. Thank you, everybody.
Thank you all for attending the session. Signing off today is Mohammad Faransi, founder of Law Essentials.